Well, you certainly can sell it a lot faster if you buy it low at the auction and then don't try and get retail price. Try to get a little bit of money, make some margin on it. So I say buy low and sell low. Welcome back. I'm Ted Thomas. I've been involved in real estate in the business for over 30 years, but I specialize in a subset of the traditional real estate, and it's called tax lien certificates and tax defaulted property. Now, in this episode, we'll be talking about buying tax defaulted property and then reselling it fast. But before I do that, I want to remind you that I receive dozens of questions weekly. I'm happy to answer your questions. So this week's question is, when buying tax deed at auction, you have to pay the auction price and the taxes. Is that correct? All right, now that was the question, and here comes the answer. So the answer is, yes, you're going to have to pay at least the minimum bid that they ask at the auction, and in some cases, the county will have not put the taxes on for that year, so they'll charge you the taxes right there at the auction. Okay, so I recommend that before you go to the auction, you call the county and know how much those taxes are, because they're going to expect at the auction for you to give them the right amount of money. Well, getting back to today's episode, buying tax defaulted property and doing it fast. These are properties that are different than traditional real estate. Basically, what's happened is the property owner has defaulted on the taxes. What does that mean? Well, that means that they're basically willing to forfeit the property. So the county will do something about that. It always has consequences. All right, now what kind of homes are we talking about? Well, this is the same as traditional real estate. Basically, these could be residential homes. They could be vacant lots. They could be small apartments. They could be small office buildings, and sometimes even small farms. Now, my perspective of this business is through the lens of an auction investor buyer. So I kind of look at all the property. Can I get a deal on the property? I'm also an author and a publisher, and I've been teaching people how to do this for a number of decades. Now, as a purchaser at tax defaulted auction, you're going to be just like me. You want to buy the property, and then you want to sell it as quickly as possible. So today's episode is all about buying tax defaulted property and then selling it fast. Well, you certainly can sell it a lot faster if you buy it low at the auction and then don't try and get retail price. Try to get a little bit of money, make some margin on it, but don't try to sell it for retail price. So I say buy low and sell low, meaning sell it lower than a retail or the comparable prices in the neighborhood. All right, so I'm going to be talking about that and talking about the surrounding marketplace. Now, if you're going to buy properties at auctions, what you need to do is you must look at the property. You have to have boots on the ground for two reasons. One, you want to evaluate the condition of the property, and two, you want to make sure that you understand what the neighborhood is like, because you're going to want to sell the property. If you want to sell a property, believe me, the buyer is always going to look at the neighborhood. Some properties are not resaleable because the neighborhood isn't good enough. So I've been involved in selling for 30 years. Now, as part of doing that, I found out that people have trouble selling. So let's see if we can give you some ideas and some solutions so that you can sell quickly and then be able to make a profit. So in this episode, I'm going to give you a number of solutions, and I'll try to give you some formulas that you can use and some guidelines so you can buy it low, then sell it low, and do that as quickly as possible. All right, so this has been going on for decades, but I've noticed most investors are really challenged with the sales process. So let's really talk about that. So most people underestimate the marketing of a property or underestimate marketing, period. So that simple blunder can make the difference between making money and not making money. So let's learn a little bit about marketing. And what we're really going to learn is we have to understand media. Now, what is media? Well, media is going to be like a sign on the front lawn, or it's going to be like the multiple listing service. All right, so if you want to buy and sell tax defaulted property, you're going to have to learn how to use media to sell them. And I'm going to give you lots of those to do. All right, so this solution is not a complicated one. It's very easy to do. You can write it down after you watch the video. You can watch the video and do it yourself. Here's the point. If you want to succeed in this business, you're going to have to learn a little bit about marketing and a little bit about media. So media would include eBay, the multiple listing service, Redfin. How about Craigslist? How about Facebook Marketplace? Any electronic site that you can find, whether it's going to be Zillow or it's going to be Trulia, you want to do that. Plus, You want to put your money into signs in the neighborhood on the front lawn, and the uglier those signs, the better. My point is, the successful buyers at auction will be real successful getting to the bank if they use media, and you're going to have to use that media to get rid of it. Now, advertising still works. Some people like to go to real estate clubs to sell their property. It doesn't matter where you want to do it. You've got to do it all at once, and you've got to keep doing it. The whole key here is buy it low at the auction, sell it lower than market, and do that whole process as quickly as possible. So tax defaulted property is available in all 3,000 counties in the United States. All 3,000 counties are going to have at least one auction a year. I'd estimate 5,000 auctions this year of tax defaulted property. So it's going to be millions of dollars of these properties are coming out into the market at 10 and 20 cents on the dollar. I don't know if you'll buy it at 10 and 20 cents. Why? Because there's going to be other bidders there. But you want to go and look, and once you've looked, figure out what your exit strategy is, and then try to control your bidding. Don't bid too high so that you can sell it lower than market and be able to make yourself some money. All right, so many of these auctions start at a low price, but the property doesn't get sold at a low price because some people bid them way up. In other words, they go way past 30, 40, and 50 cents on the dollar, and that means they're probably going to have a challenge selling it. Now, of course, if someone's buying a property next to where they live, they're going to pay anything to get the property next to where they live. So that's not really a competitive market that you want to be involved in, but you're getting the idea. So I teach my students, buy it low, sell it low if possible. Okay, you want to be the bargain guy so people get used to that. And you want to be the person that understands your best solution is to use lots of marketing and lots of media. All right, so people that don't understand media, they're just going to put a little sign on the front lawn, and then they're going to pray that they're going to sell their property. Well, I'm going to tell you, prayer is not a very good business strategy. However, using media is a good business strategy, and you want to use lots of it. Now, people that can't sell, what do? They get a little sign down at the Home Depot, a little sign like this, says for sale sign, and they put it on the front lawn, okay? What are they? They're for sale by owners. FSBOs, they call them. All right, I'm not against that. You know, the challenge is you're trying to save a real estate commission, but you're not getting enough exposure for the property. It's much better to use media and let everybody know that that property's for sale. And, of course, if you use installment sales, in other words, allow someone to make payments to you, you'll be a much better seller than the average one on the street. All right, so let me repeat that just a little bit. The solution is media. Redfin, Craigslist, eBay, multiple listing service, Zillow, Trulia, newspapers. You want to use all the media possible. Now, why did I repeat that? Because it's so important. All right, and if you use installment sale, that's going to help you out a lot more. Now, if you're wondering what an installment sale is all about, a seller can use an installment sale. In other words, just like you go down and buy a refrigerator and you pay payments on it, you can do the same thing with a property, called a contract of sale. You can create that contract and put installments in there, and you could earn interest on that. So you can sell the property and make a profit, and you can make a profit on the interest. All right, so if you want to do that, you can do that with seller financing. Happens all the time, and that helps you sell the property because there's about 25% of the market cannot get a loan. Why can't they get a loan? The banks have turned them down because they have low FICO scores. So today's episode is all about buying a tax defaulted property and then sell the property fast. Now, people that do this are usually entrepreneurs. Now, one of the reasons most people become entrepreneurs is they don't fit into a corporate environment. They want to do their own thing. They want to call their shots themselves. They want to work for themselves. They don't want to have someone telling them what to do. So I know many of my student entrepreneurs, they actually quit their job. I always tell people, don't quit your job. Keep your job. A lot of people quit. They quit a 40-hour job. They go home and they work 60 hours, and they don't make as much money. So if that's you, I understand that. A lot of people just want to do their own thing. But the best way for you to do this is you want to think about using media to sell the property and sell the property yourself, and you're going to be able to make lots of money doing that. All right, the investor's approach is buy low, sell low, don't buy junk. Now, what are you buying when you're buying tax defaulted property? You're buying property that are slightly used and abused. Some of the properties are junk. Don't buy the junk. There's many properties that just need to be cleaned up. And if they're cleaned up, they're ready. All you have to do is put them back out into the marketplace. Throughout these videos, I'm including examples. Now, when I include an example, that doesn't mean it's an exact example because we don't check the property to find out every penny that was earned on the property. So these are just examples for learning, but I'll show you these from previous experience of how we've been able to help other people. So keep in mind, these are the motivated buyers. These are the people that are really eager. Everybody doesn't make this much money on a property. So this example is buyer beware. Why? Because the local county sells the property as is. They're not giving you any warranty as to the condition, and they're giving you no warranty regarding the title. But let me show you the example. In a local county just north of Tampa, Florida, one of my student clients purchased a property for $9,100 for a 3-bedroom, 2-bath house. Now, the property was used and abused. It was absolutely covered with trees. My goodness, covered with the trees. All right, but the property had a tax assessed value of $91,000. All right, he bought it for $9,100. It had a property value of $91,000 according to the assessor. Now, we taught him to go out and check the comparables in the area and know what he's going to be able to sell it for. Well, sure enough, he checked comparable values and found values all the way up to $150,000. Here's the good news. He sold the property. He didn't use the buy low, sell low formula. He sold it, and the person gave him a small down payment, did an option to buy it. He sold it for $5,000 down, and he sold it for $150,000. All right, so how many of those would you have to do in your life where you bought it for $9,100 and you sold it for $150,000? All right, is there a guarantee that you can make that much money on every deal? No. If you don't get in the game, you won't make any money. All right, now right below me, you're going to be able to see an auction calendar. So let me tell you just a little bit about that. You see those little white circles? That's how many auctions are taking place within that state. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. The counties that have small populations, low populations, those counties will have dozens, maybe hundreds of properties for auction. However, there's other counties that have large populations. They're going to have many properties, 100, maybe 1,000 properties to sell. Those populations are going to have many tax defaults, so you can choose whichever one you want. But you can go right below me and you can find out right away. You can find out where the auctions are and how many properties for sale. I'm Ted Thomas. I'll see you on the next video. Don't forget, request your free gift right below me.